Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profit Daily. I am Brijesh Bhatia. The talk of the town is the dollar index. Dollar index is trading at 20 years high. And do you know, it will be completing its 50 years in March 2023. Since it started, we only had one revision into the dollar index. And look at the revision happening into the equities, where there are frequent changes into the stock, the weights. But if you look at the dollar index, in last 50 years, I would say precisely 49 and a half years, we have seen only one revision, and that was a much needed because the euro was formed in 1998, 1999, when euro was formed, with the 19 countries out of 27 countries, which means that 90 members of the 27 members into the eurozone approved the currency, a common currency called euro, and the eurozone was formed. And back in 2002, when the euro was introduced, at that time there was only a one revision into the dollar index. What do you think? Write into the comment. Do we need the revision into the dollar index? Well, when it was formed right in 1973, there could be a lesser number of countries where the export import was happening with the US. And I'll go into the history as well. Prior to dollar index, I guess in 1944, there was a Bretton Woods systems which was being developed in 1994, because there was an agreement uh, around with the country like US, Canada, Western European countries, Australia, and Japan. They formed a Bretton Woods agreement, and this system was introduced in 1944. And since then, probably for around 30 years, 29 years, the system continued. In If you look at the 1967-68, the dollar index, especially the dollar, a trial was being going on till it was launched. So at a current point in time, if you look at the dollar index, the weights or the currencies there are six currencies which form the dollar index. It is largely led by euro, which holds around 57 percentage, followed by the yen, which holds around 13 and a half, GBP, which holds around 12%, CAD around 9%, the Swedish krona around 4.2%, and Swiss franc, which is around 3.5%. So these are the six currencies as of now where the index is formed. And as I said, the major impact into the euro, and it has a global effect on the dollar, which put pressure on the other Asian countries, other European countries, other Australian countries. I would say it is globally accepted, but considering the index with the six currencies is slightly, I think it's not good, because it has an impact on the most of the countries. So what do you think? Do write under the comment. Coming on to the dollar index, and if you know, as per the IMF data, why dollar index is widely much important to follow, because 60% of the foreign exchange reserves with the central governments are into the dollar. If you look at the mobile apps, as we are into the digital era, most of the ads you get are of the forex trading, Bitcoin trading, all sort of trading, and they are into, again, the base is the dollar. And most of the global forex currencies which are being traded, which are being hedged, are accumulate to around 90% of the trading volume. So look at this, global debt denominations around 40%. So dollar plays a key important role, and I don't know why there is no revision as of now into the dollar index. So let's start with the history over here. So let's look at the first chart into the history. Back in 1967-68, dollar was introduced, and gold was packed at a standard rate of $35 per ounce. Well, you might be wondering, $35 a gold at that point in time, and now a nearly 1600 plus dollar mark, a huge change. Then the dollar index fell because this is adjusted now. That's the reason you see the price action chart over here. But again, it was introduced in 1973. As I said, if you look at the blue mark end of the Bretton Woods system and the gold standardization rate, helped the launch of dollar index in 1970. Prior to that, during a recession time, we saw a dollar index falling. So at the launch of 1973, it was at standard of 100. So now if you look at it's currently trading at 114. What does mean? That it is 14% higher, which is 14% appreciation from the base level against the other currencies over here. So that's the impact of dollar. Again, if it goes 80, which means that 20% depreciation is there of dollar against the major currencies. So we saw after the launch there was a momentum going downwards. We had some recession time during the time back in 1974-75 when the things started looking good. US started reducing the interest rate after 4 years. So around 69 to probably 73, 74, the interest rates were same or increasing because they wanted to control the inflations. Back in 1980, 79, 80s, we saw oil crisis happening, and at that point in time, the dollar index made a major bottom. We saw again the higher levels up. Then we saw the Black Monday bottom over here. If you look at the structure, uh, again it is very important to look at the yield curve inverts over there at the certain peaks. So it is very important to look at the structure over here. Now if you look at the Persian War 1990 bottom is in place, which is also important to look at into the current structure. Then if I just look at the fresh bottom when the 2008 2009 the great recession happened, back in 2008 we saw a QE happening. QE1, QE2, QE3 happened, and prior to that in 2001 there was a introduction of euro at $90, which means that we saw this fall to bring the weightage into the control at 90 when it was trading somewhere around 115, 116. So look at the fall over there. Then again back in 2018, 2008, 2009 when things started slow and steady, gradually economic things came back strongly, recovering 2009, 2010 we saw the interest rate again coming back to the normalization. We saw Eurozone crisis of the migrants happening, and all those stuffs made dollar again a stronger. 2020 we all know COVID happened. We saw a momentum on the downwards. Now when the inflation, there US want to beat the inflation, they have started raising the interest rate, which is again making dollar index stronger and stronger over here. So this is a history right from 1973, from the launch towards the 2022. What are the levels which I am eyeing onto the dollar index? And that is very important. If you look at the structure, it's been all the way dollar index right from around 102, 103, we back to 114 now. It's putting pressure on most of the global forex or global currencies over here. When we saw a rupee which has been depreciated by 2 rupees in the month of September, nearly 2 rupees from right 79, 17 and a half to 81 plus levels now. 2 rupee depreciation is fast and furious. Momentum is slightly a sight of caution. So let's start with the dollar index chart. What I feel and what are the technical structure highlights onto the dollar index. So if I just look at the chart over here, if you look at the blue channel, again this is the monthly chart over here, and the blue channel prices are trending higher and higher. The black line above, it's currently around 121, 122 level. So if I just look at the structure, I believe this rally could prolong towards 117, 120 zone, where there could be a pause probably in a month or two, but this rally seems a stronger dollar over here. 170, 118 towards 120 can be eyed onto the dollar index, which may put pressure onto the other global currencies. Starting on to the weights, let's look at the first three highest weights, which are euro, which, as I said, which accounts to around 57% weight, GBP, which holds around 12%, yen and around 13 and a half. So starting with the first, the euro USD, if you look at, the prices are falling, which means that euro is getting weakened and dollar is getting stronger. So when the prices here goes lower, if you look at, this is again a monthly chart, we have seen a breakdown happening of the rising channel. Now, looking at the structure, looking at the 57% of weightage, where the channel breakdown happened onto the euro over here, there could be a chance that probably we may break out on dollar index on the higher side. See, 57% weightage is a do on a higher side for an index, for a instrument into the index. So the breakdown over here trending at around some now 96, 0.96 or 96. A slightly a cautious sign for euro. I think there could be a deepen scars onto the euro over here, where we may see around 90 to even 90 to 94 levels coming onto the downside into the euro, which can take dollar index onto the higher levels. And as I said, it may put pressure onto the other global currencies. If I look at the second over here, British pound, which is the GBP to USD, the similar structure, the series of breakdown, a continuation momentum, a pause to the momentum, and then again a resumption. So back from 2006 2007, if I just look at, we saw a triangle structure breakdown, a downward journey, a pause to the momentum for last 4 5 years. Again, a fresh breakdown has been there. So this fresh breakdown can be very severe for pound. And if you see, if you read, there was a trading halt into the GBP because it was falling at a faster pace. So yes, pound seems to be on a negative side, being around 12% weightage, with 57% weightage on euro and 12% weightage on the pound, accumulating to around nearly 70%. So the 70% of the instrument seems in the favor of dollar getting stronger over here. Looking at the third over here, the dollar to pound. Now this is an inverse. In the previous euro USD and GBP, the USD was the denominator, but in this case USD is a numerator. So which means that the base is the yen. So prices going higher means that dollar index is dollar is getting stronger against the yen, and vice versa. Now, if you look at the structure over here, we are back towards 97, 98 levels, where it was somewhere around 149, 150 levels. We saw from 150 back towards 75, but now trending somewhere around 144, 145 back to the higher levels, again breaking the previous swings. The bottoming structure is in place. I believe 150, 154, 153 is taken out. There could be a worse scenario for yen, and it will be, I think it won't be very easy for Japan to manage this currency over here. So 153, 154 is the levels you should definitely eye on the yen, and this is the one which is yet to be breaking out. Again, it holds around 13 and a half of weightage onto the dollar index. So with the 70% weightage are showing that dollar may get stronger, and if it continues to get stronger against the yen as well, we may see this breakout coming sooner into the dollar index as well. So keep a watch on this yen. This is the only one which is trending at the support zone. Now, what about the USD INR, and why should you worry about the USD INR? Well, the weakening rupee we have seen in 2013, 2018, when rupee weakened by a faster pace over the dollar. It has put pressure onto the Indian equities, which is Nifty and Sensex. So again, 2 rupees depreciation is a big number. If I look at the momentum onto the USD INR, and it generally attracts when the outflows attracts when the rupees are depreciated. So I believe, looking at the structure now, if I just look at the technical, purely technical base levels, we have seen the breakout from the black line. If you look at around 77 and a half, and if you remember last year also I did a video when it was trending around 71, 72, that 80 could be the target. You should keep a watch on USD INR. We have seen those levels. Now when the things are breaking out, I believe as a subscriber you should know our in-house view, what are the targets we are looking at the USD INR. Onto the technical structure, if you look at the red or the reddish color chart pattern over here, this is the bullish pennant. Now the price is breaking out of the bullish pennant right at around 80 and a half, 81. If I look at the structure, seems in the control of dollar over here. So dollar is may get stronger and stronger. The target as per the pattern, if I just look at the pole, which was around 73 up 74 to around 80, so around 6 rupees pole, and even if I calculate 61.8%, which is around 3.5 4 rupees, and if I look at the whole target of 6 rupees, I believe the targets could be around 84 half to around 86 level once the breakout levels, considering the breakout level of 80 and a half. I believe 84 and a half to 86 levels can be expected on the rupee over here, which again, as I said, may put pressure onto the equities into the Nifty and Sensex. Generally, what happens is when you see the knee-jerk reaction happening into the depreciation of rupee, there is an inverse relation to the Nifty, and that's what exactly we saw right now as well. If you remember, Nifty was one of the outperforming indices against the global markets, but the depreciating rupee in the I would say second and third week of September has put pressure onto the last week of September onto the Nifty. We saw 18,000 back towards the levels below 17,000 now, and that is again there are two divergences I would look at into the Nifty. Though this video is not about the Nifty, but considering the impact of rupee, it is very much important to look at Nifty and Sensex as well. So with the depreciating rupee and major outperformance of Nifty against the Dow Jones, and Dow Jones trading at 52 weekly low, it has put a psychological barrier on the back of profit bookings into the Indian equities. So you will need to watch how this impact around 81 half 82 levels, but I gradually think we are heading for around 84 half to 86 level onto the dollar against the rupee. So keep a watch. In any case, if there is a dip into the dollar, you should definitely look to buy a USD INR, and I'm expecting the target of 84 or 86 onto the USD INR. So signing off, Brijesh Bhatia.